what a day it has been for precious metals, especially gold and silver. Today we've seen a massive dump for both, continuing the dump from yesterday. If we take a measure here, for example, we take silver and we measure how much silver has actually gone down from the top. We are now down almost, here we go, 40% from the top. And for gold, we are also down quite a bit. We're down almost 16% for gold. And that is historic. That is a very much of a dump, and it's going to be remembered for a long time. Now, if we do go and zoom out a bit, let's zoom out on the 12 monthly chart. Obviously, gold and silver have gone up very much in the last couple of months. And if we compare this to the last few major dumps, and this is 1980, we can see that there's always these massive corrections coming, right? And we're overextended. There's a lot of leveraged longs. People are betting with leverage that silver and gold are going up. And if everyone's talking about these things, if you see a taxi driver talking about silver and gold, and of course everyone's talking about it right now, if we have daily returns of 5 to 10%, like any market, if we get overinflated, we're going to have corrections. And we can see we've had a massive correction here in 1980. We had a massive correction in 2011. And right now, again, we're overinflated just as we were in these two times here. Now, of course, silver is going down more than gold. You can compare it basically to Ethereum and Bitcoin, whereby silver is more volatile and gold is more mature and less volatile. But we are continuing the downtrend, and it does look pretty bad. Now, personally, I think we can go lower from here. So might not be the best time to buy right now. But usually we do know that whenever we go down, when everyone is selling, it's a good time to buy long term. And personally, I think gold is still a good buy for the long run, and it will always be a good buy, especially in times like these where the price is dumping. But the price could continue going down, especially now that we're going down this fast. We need to see consolidation first. We need to see the price consolidating sideways, finding support. But for now, we are going down very drastically. If we look here, for example, spot silver falls as much as 35%, dropping below $75 per ounce, on track for its biggest daily decline in 46 years. And I said we're almost down, what did I say, 40%? That's crazy. Also here, gold loses $6.3 trillion of market cap in under 24 hours, its largest drawdown in the entire history. That is 263 billion per hour for the last 24 hours straight. I mean, look at these precious metals, gold, silver, copper. We have seen almost $10 trillion in swings over the last 24 hours in drawdown, and that is enormous. I mean, just keep in mind that cryptocurrencies are only $2 trillion in market cap overall, and we've seen $10 trillion wiped out in precious metals. And this just shows us how volatile markets can be, but also how small cryptocurrencies are compared to gold and silver. And the next thing I want to talk about is, other than these, is basically that we have had an announcement for who's going to replace Jerome Powell as a Federal Reserve Chairman. And that person is going to be Kevin Warsh. Now, Kevin Warsh is historically seen as someone who does not like quantitative easing, meaning, and we had COVID, of course, we had the interest rates very low. And he was criticizing that we had the interest rates too low for too long of a time. And also he didn't like that there were stimulus checks which happened during COVID. So the market is, I guess, reacting to that somewhat, because he's not that, he doesn't like quantitative easing, so they expect that he will not lower the interest rates too much. So yeah, like I said, that's not the main reason for the dump. It is a reason, but the main reason is that we have just been overinflated. Now let's look at something called the dot plot, and it's just showing us the consensus in the Federal Reserve. What are the board members thinking about the interest rate? And the dots is basically their votes. There's 19 people who are giving their votes about what they think long term will happen to the interest rates. And we can see the light blue is basically where's the majority of dots. So what do the majority of people think in the Federal Reserve that will happen to the interest rate? We can see here for we're in 2026, we can see it on a yearly basis. So we can see that in 2027, they expect the rates to be 3.25%. Then in 2028, they expect the rates to also be majority at 3.25%. And in the long run, they expect the rates to be 3%. Keep in mind, we just had the interest rate decision at 3.75%. So we can see that most people in the Fed are not expecting 2% interest rates or lower anytime soon. And of course, that is not good for the markets. Low interest rates means there's going to be more money in the market, which will push up gold, Bitcoin, will push up everything, the whole market, right? This just shows us that we are not there yet. Inflation is still high, and this is not that good for the market. Now, let's look at Bitcoin. And if we look at Bitcoin, we have CME gaps. We've talked about these in the last video as well. They are formed over the weekend and they usually get filled 95% of the time. Now we have a CME gap remaining at 93,000 right here. So obviously we are at the moment right here, and we had this CME gap which was filled very quickly after. You can see the gap is here, right? Here's the gap and there's the other gap. So what I think will happen, we're gonna go up to 93,000, fill that CME gap with very high likelihood. And that's a good point to start taking shorts if you want to. If you wanna have more confirmation, definitely wait for us to fill and retest the 200 daily simple moving average. And this is the line, the white line. It's just the average price over the last 200 days for Bitcoin. And usually we retest it. So let me zoom out a bit to the last time we entered the bear market. And you can see here's the peak, here's $69,000 per Bitcoin, and we went down. Then before we continue going down, we went back up and we retested the 200 daily moving average, simple daily moving average, before we went down. Same thing I expect to happen right now. Firstly, we know we have the CME gap at 93,000. Right, this is round about here, CME gap. So what I think will happen, we're going to retest CME gap, go a bit sideways, retest the simple moving daily simple average, and continue going down. And the average, of course, as we go down, the average line will also keep going down, something like this. So if we extrapolate it, we can make a projection that we're gonna hit it around about 100,000, 102, between 100 and 102,000. So I think Bitcoin can go back up between 93 to 100,000 and then continue going down. If we also look at Bitcoin here, we had support at this line, which is around about $84,200. We've retested that support 1 time, 2 times, and right now this is actually very good news. You can see that yesterday when silver and gold first started dumping, we actually went below the support quite a bit. We went all the way down to $81,200. But now we're getting back above support, which is very healthy to know. And I like to see that. And it looks like we are gonna stay above the support, hopefully, bounce from here, and then the rest will play out exactly as I said. We're gonna go to the 93,000 CME gap, then potentially retest the 200 simple daily moving average at 100,000, and then we go down. So hopefully we can stay above this line here at around about 84,000. I hope you guys liked the video. See you next time, and bye bye.